General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's start the work. Because it's so, it is what it is. It was a day, interesting day. That pop at the end. Man. All right, let's do the work. So the delivery started, gap down, end of the world with oil and war, all that good stuff. Hit through the 200 daily SMA, big buying area for institutions and everything. Did we bounce off of it? We bounced off of it in New York session too. So like all the EMA traders probably ate. See, that's what we get for not having it on our chart too. That's the buy from the how to trade book. Lord. Beautiful rally. What is this? Friday's low? Yeah, it's technically the 2-day low. The indicator smart. PM session gave a huge rally. Took out all of this buy side liquidity. Then we hit my key level in the PM session and dropped. We even reacted here. It's got good levels. I get one of them setups where you have like the 6 screens. You see everything. You'll never miss a level. One side of the day after the gap down. Mm, I think we broke the quarterly low as well. Where is the quarterly low? No, it's over here. See over here. Did we break the quarterly? No. I've seen it somewhere. I just want to be on the spot. Alright, boom, boom, boom. One side of the day after the gap down. It's a low resistance liquidity round. For OT retracement. Yeah, it's too clean. This is weak. I need to. There's a lot of colors on this chart already. I need something yellow. It's too many colors. Let me measure this swing as well. Because if that's in discount, it's even more interesting. No, it's in premium. I like 50% too, but it's definitely a key level for me, especially if it's this clean on the futures chart. It's going to be a new contract. Oh, it is. All right, cool. Flat bottoms there. We should clean this up. Previous week's high. All this is not even really that interesting to me. This where would I want to buy? It can be under Asia. This is probably right here. This is actually, yeah, under Asia. It's okay with me. Or OTE of this swing, just from here to here. It'd be like a shorter pullback. This is a huge run though. This is the invalidation area. Really this low. This low has to stay in. In order to stay bullish. Even if we come down here and get this gap sell side delivery, which could happen. We need to bounce here. This low needs to stay. Going below this, we should react here. Everything kind of lines with that flat bottom. Well, let's make this blue. It's bullish. It's too much red going on. Alright. Buy from here. This should stay. This is efficient. That's a cool low too. Power tracers. Until we get above previous week's high, then we'll look for reversals. I'm not convinced of all-time high. Like previous month, yeah, all-time high. I'm not convinced of. But not right now, at least. Still think we need to trap some. What's this? Monthly close low. Above here is bullish. We tapped that today. And we're playing in that gap from a weekly perspective. We just put a body there. This is huge body. We can kind of stay in this range too. You don't even have to leave. Imagine if we stay here the rest of the week. Just to be like, all right, we're gonna see if you can really manage your risk. It's character development. We just stay here the rest of the week. Boom. This is the most logical target for me. Just for tomorrow, just another strong buy. Everybody's excited going into Wednesday. CPI could be manipulated. Yeah, it just is it's good. We take this high. Maybe even up here. All-time high as far, see what I'm saying? So it's okay. This is still not super bullish. We just had a good ass day. Maybe here tomorrow. I like failure swings. Bam. Little pop up. If we hit it overnight, a little retracement, maybe even higher. But if we don't hit it by New York, then that we might hit that for New York and then just chill. Just chop the rest of the day and theta smash people. Let's see here. That was a sneaky large range day too. PM traders, man, they be killing it. Mm. SPY had a cleaner push at the end. Let's look here. SPY like to set up the, well, not even SPY or SPS, the same stuff anyway. Set up them equal lows. It's been doing that. It had them equal lows here, crashed it. Had them equal lows here, crashed it. It's been engineering liquidity. Previous week's high makes sense for SPY as well. This 11 o'clock candle is interesting. That's that same time. Yeah. What happened at 11 a.m.? Three nine 2026. That move a stock market. Let me ask chat, because Google. I don't know. Google might know. Yeah. Okay. Iran news. After opening, boom, boom. Yeah. Delivering positive news regarding the conflict. President Trump told a CBS reporter the war is very complete. Pretty much. That's the. I know he said it like that too. I'm pretty sure he had that pretty much on there. Okay. All right. So this is Trump's 11 o'clock candle, but it needs to get tapped because candles need wigs, and they don't got one. All right. Let's see. Looking for pies till we hit previous week's high. Hold on. Getting all kind of buzz. Same thing. I want to see this whole. We can come fill this whole gap. He didn't hit the level here. It don't seem that strong. And we didn't go back to the old new week opening gap. Higher makes sense. Retracements make sense. Not super deep retracements. Hold up. I need the 15. Somehow they're so much alike, and it's not different tickers. Mm, 2 exact. Nothing stands out. I even thought I already did it. The 2? Yeah, it's 2 zeros. Yeah, we had this candle. I was gonna say, have we had one of these gap down up candles? But this is a stock looking candle. This happens on stocks more than anything. It's a down up day. It's a down up day. I'll watch this open price too, because we can easily just go right back down off some news or tweet or whatever. We don't have any confidence in a sustained move. It's too much stuff going on. What's the weak point on this daily chart? For buy side liquidity, it wouldn't be here. It'd be here. It'd really be here. We need a candle body here. This would be low hanging fruit, but this would be the liquidity. That's too big of a day too. But low hanging fruit here. Am I hitting the wrong button? That gap is interesting. But this day is Monday, March the 26th. That's the day I need. And it's not bad, like a $10 move. This might be terrible, and Tuesday could just be a nothing day. It's high bar day. Look how we already kind of starting. In order for the day to be good, I want to see London close above open price. Low hanging fruit is here. Nasdaq is further up the food chain as far as hitting intermediate term highs. So Friday's high. Friday's high is my low hanging fruit. CPI is Wednesday. Gotta be careful, especially with the VIX. It's almost 30. Oh, it was 30, but it's still almost 30. But it's still pretty high. CPI Wednesday, we gotta be careful. VIX is almost at 30. We could chop all day tomorrow. How did the framework play out? I mean, I wasn't expecting that. This came good, yeah. My pattern. This has been a learning experience. Watching these markets with the high VIX. Very interesting. We'll watch for tomorrow. Low-hanging fruit. Yeah, I think long term, better conditions put on better risk. About the VIX being 30. But it'll go up to 40 and then it's just like, alright, just gotta tighten up. It is what it is. Have a good day. Peace.